Hey guys, it's Jessica Stone at Stansberry Research, and I've reached Brian Tycangco of True Wealth Opportunities China on the line. And Brian, you have a new nickname for Chinese technology stocks that's sort of the equivalent of US technology stocks known as FANG. What do you got?
It's actually JANT for me. It's JD.com, Alibaba, NetEase, and Tencent. And these four are really doing very well and giving the U.S. major tech stocks a run for their money. In fact,
Yeah, and US
you
investors got a huge bump from Alibaba's reporting, right? They blew away their first quarter earnings.
exactly a little bit on that later, but these four stocks, these four Chinese stocks, have actually outperformed the FANG stocks year to date by almost 10%. Going back to Alibaba, I mean, boy, they came out with blockbuster earnings today, blowing away market expectations. They grew revenues by 30 odd percent, 34%, and this at a time when they don't even have their strongest season for online sales.
There is a lot that has an impact on investors going on that's coming out of Washington. We're hearing more and more reports that there's likely to be an effort to force more Chinese technology stocks off US exchanges. How seriously do you take that?
Uh, okay, well, that is, I think, more bark than bite. Chinese tech stocks that are listing in Hong Kong
The
are
homecomings that you talk
U.S.
about.
investors a very big favor. They're not doing Chinese investors any favors here. I mean, if a U.S.
Meaning
listed
the homecomings are benefiting American investors?
exactly because American investors, for the
Yeah.
most part, especially big investors, will be protected from anything like that, any delisting threat, because the shares are fungible, whether they're in the U.S. or in Hong Kong. So if it gets delisted in the U.S., it's still tradable in Hong Kong. So by actually listing their shares in Hong Kong, they basically knock out from the equation the threat or the risk of delisting that the listing poses on their investments.
What about this scuttlebutt that there's going to be an effort, or there has been an order to ask major college endowments in the United States to defund or delist their assets and their investments in Chinese equities?
Yeah, I find it kind of funny how they kind of suggested that. Um, Endowed funds from colleges in the U.S. amount to about $600 billion. A small portion of that maybe I'm just guessing here, maybe 5% might be exposed to Chinese stocks. It's not a lot, but in the grand scheme of things, like I said, you have they're probably invested in the big four or at least the big five Chinese tech stocks, or at least the JANT. They're invested in that. And why would you want to divest out of a group of stocks that is outperforming the best tech stocks in the U.S.? It's like you're in a derby and you're going to shoot your prized horse because you fear that next year it might catch a flu.
This administration's actions with respect to limiting US components going into Huawei really sent a lot of other semiconductor stocks plunging on that news. Is the idea there and the concern that, well, hey, if Huawei, if this is the death knell of Huawei, then there's going to be a real big great wall for any Chinese semiconductor or technology company in getting into 5G or other markets with respect to technology?
Yeah, right now, because of the sanctions against Huawei and the efforts of the Trump administration to basically block them from new semiconductors and technology that can produce that, they're really handicapped. I mean, they're looking down a road of maybe some downgrades in their product cycle, lengthening of the introduction of new products, and that may turn off some consumers, or that may not. We really don't know exactly what maybe the next 3 to 5 years holds for China in terms of semiconductor technology. But what we do know is that they're investing a ton of money
Yeah,
to
that's what I
develop.
was going to say. I mean, the odds are in their favor because they're pouring money into the sector.
China has clout. I mean, they are the world's biggest market for semiconductors, the biggest consumer of semiconductors, the biggest smartphone market, the biggest computer market, the biggest IoT device market, you name it. All these things are going to need semiconductors. And you don't want to serve that market, it doesn't really make a lot of sense right now.
how can investors be prepared for sort of this bifurcated technology world? Do they need to, is diversification in the technology sector essentially going to mean, hey, you need to own some Chinese stocks and you need to own some American stocks in the same industry?
I want to have my hands in both cookie jars, not just in China, not just in the US. I want to have it in both because there are benefits to having them in both. China, already way ahead, and you're going to start seeing the benefits of that very fast. Maybe in the next 6 to 18, 24 months, you're going to start seeing benefits of that. When it comes to the U.S. and other Western economies, even India is much farther out because of their lack of infrastructure. But Western countries that are adopting 5G now, you probably see it maybe 3-4 years down the road. So if you're an investor, you want to make sure you have some exposure to Chinese tech stocks, even with this kind of climate that we have right now.
All right. Brian Tycangco there from True Wealth Opportunities China. If you want to be connected to his research, hover on your screen now and we will connect you through a hover link. Also, please find us on YouTube, Facebook, LinkedIn, Twitter, and Instagram. Thanks for watching. That's all for now.